Hello guys, welcome to the daily market analysis video. My name is Apurva. I make educational content videos on swing trading, positional trading, and long-term trading sometimes in Indian stock market, on mid caps, small caps, and sometimes large caps as well. I'm going to use price action, pattern trading, trend lines, counter trend lines, liquidity, price action, volume-based price action, candlestick pattern, supply demand conversion zone, and at the end of the video, risk reward ratio, risk management, which is the most important part of any trade in the world. Now, let's start the analysis. And if you do not understand any term, any terminologies, any jargon that I'm going to use throughout this video, do let me know in the comment section that is just below this video. Above the comment section, you will find the related idea section where I've uploaded more charts and more videos for you guys. Now let's get right into the video. Today we are going to discuss two stocks, Ashima on daily time frame and Hariom Pipe on daily time frame. So right in front of you is Ashima on daily time frame. Let me show you what I have done here. So this was the near term high. If you go to the monthly time frame of the stock, you guys will see that this is the whole picture. Always see the whole picture first and then make your mind. Okay, this is what I do. Most of the time what I see is that maybe there is some resistance coming. Something is always there on a bigger time frame that is happening. So if you are a trader who trades on a smaller time frame like daily and weekly, then must see the if you're a trader who trades on smaller time frames like 1 hour, 2 hour, 3 hour, 4 hour, or 1 day, okay, then must see the weekly time frame. If you're a trader on daily and weekly time frame like me, then must see the monthly time frame, what's happening there. Multi time frame analysis is a very key ingredient in any time, in any form of analysis that you do. Now here, let me show you what is happening. I'm gonna make a supply zone, supply demand conversion zone type of thing. Okay, not a very perfect one, but yeah, a resistance, breakout, support, consolidate, and now again breakout. So this is kind of a base that's been created. That's why we call it a like a base breakout happening at this particular area. Let's make a counter trend line, throw a counter trend line here, make it with red line. Okay, so what is this? I made a counter trend line. So the overall trend of the stock, the current trend of the stock, on this particular screen is uptrend, higher high, higher lows. What is the uptrend? Higher high, higher lows, and then again a higher high. After this whole one side movement of higher high, higher low, the market goes into a consolidation. Now this consolidation has been broken out with a power candle here of 17%, okay, with good volumes, but 17% is pretty high in terms of risk. Now let's see that what we can do. The previous high, this was the previous high closing basis, it's broken, and power and the stock has closed sufficiently above it, right? Now let's see that this wick and this particular closing, let's go to the line chart, closing and wick. Okay, both are giving us a solid supply zone, means the previous resistance zone from from where the stock actually retraced back here. For how many days after this zone was hit? 78 day of consolidation happened for the stock. Now this is what we call a descending triangle pattern. It's been broken out with a Marubozu candle, although the candle is huge. So what I do in these type of situation is I trade them. But how I trade them? I keep a stop loss below the trend line, the counter trend line. Now I'm not saying to you guys that keep a stop loss below the trend line, counter trend line. You guys can keep it wherever you want. That is completely your own personal choice. Okay, this video is a educational content video. Do not copy paste anything from it. It is not a call or tip video. Okay, so understand thing from this particular video, stay out of the box, think out of the box, and apply things from your own side. Maybe you can add your indicator, your own price action of your own, okay, something of your own. Now coming back to the video, so right here you guys can see it's a 10% risk that I am personally taking. That is my own thought process. Why? But the bigger question is why I'm taking 10%. See, if I take a stop loss from this particular point of 14%, and I see that what I'm getting on the top side is almost 18% as the first supply zone, the second is 20% around. Okay, so if you multiply 14 by 2, what are you getting? 28, right? So if I take a 50, let's take a 15% stop loss maybe. Okay, so I should be getting in this zone, I should be getting at least 30%, right? Although anything above 1 is to 1, I mostly take like 1 is to 1.5, 1 is to 2. These are good risk reward ratios. But if you are getting, like if you're getting a 1 is to 2, I mostly take the 1 is to 2. So risk 10% and get 20 or more than 20%. So that is what I'm thinking here, 1 is to 2 risk reward ratio, a better risk reward ratio management. Okay, so that was my stock number 1 on discussion. Now second stock on discussion is Ashima. So Ashima on daily time frame, let's discuss. Sorry, the second stock is Hariom Pipe. So let's discuss that stock as well. So right here you guys can see again this stock is trading at all time highs, monthly time frame, so no more resistance here and resistance or anything. Okay, I've created some lines here. So the red line that I've thrown from the top is the counter trend line, and this is the double bottom being made here, neckline broken, and then a one side movement, took resistance from this area, took support at the resistance area. This was the resistance, and now it is converted into a breakout, support, upside movement, consolidation. Again, buying was happening from this resistance zone that was converted to a demand zone recently, and finally at this area there was a lot of resistance. Why? Because this solid line, this is a resistive line. Okay, this is a hidden resistive line, not a hidden line, just a resistive line giving resistance and everything. Okay, a line that you guys are not able to see now. This is a hidden line that can also form some type of pattern maybe in coming days or coming weeks, whatever whatsoever. But whatever line like this comes in, okay, it's like a hidden pattern that's in making. Although here you guys can see that there is no hidden pattern looking, but yeah, still this could have given a solid resistance as well, so I've just made it. Now resistance line, hidden line, and the top line is the counter trend line. Let's see the risk reward ratio. Now the candle is nice, but yeah, there is some wick, so always a suspicion is there. But yeah, volume increase from the previous candle, that is a very good sign. Let's see the risk reward ratio. 7% risk on 16% rewards, so that is almost 1 is to 2.5 risk reward ratio. Looks pretty good to me. So yeah, that's it from my side, guys. I hope you enjoyed this video, learned something today of value from this video. And if you have any trouble finding the price action difficult, or you want to make any discussions, doubts you have on your mind, do let me know in the comment section below this video. Above the comment section, you'll find a related idea section where I've uploaded more charts and ideas for you guys. Have a good trading day tomorrow.